How is it going, everybody? I am Aman from Cloudiverse CPS. Today I'm going to talk about business expenses which help you reduce your profits and pay fewer taxes. At the end of the year, you might have a lot of profits, and this is a really good problem to have. But when you have a lot of profits, you end up paying a lot of taxes. So many people at the end of the year will go, oh, we really need to increase our business expenses so that we can reduce our profits and pay less taxes. Now, to me, this seems to be a dangerous thing to do because you might be tempted, just like many other taxpayers, to write off personal expenses as tax deductible business expense. But doing so could get your expenses denied by the Canada Revenue Agency and could even expose your previous year's tax filings to reassessment beyond the normal reassessment period of 3 years. Some of you might ask, why will anyone want to classify personal expense as a business expense? Well, the reason is that if you want to buy a particular item yourself, then it is going to cost you more because you will buy it from after-tax dollars. However, if you buy this item as a business expense, which you will use 100% for your business, then it's kind of 30% off on that item. For example, if you buy a $1,000 laptop, it's really only going to cost you $700. Now, one of the main questions that you may have is, how do you decide if an expense is a business or a personal expense? Well, as per the Canada Revenue Agency, business expenses are certain costs that are reasonable for a particular type of business and are incurred to earn business income. What is reasonable business expense for one business may or may not be reasonable for another business. For example, it seems sensible for the home designer to be claiming lunches entertaining clients as a business expense. But it will be an odd thing for a plumber to do that. However, if the home designer is claiming $900 as an expense for a single business lunch, that's going to raise the red flag with the CRA and possibly get the business audited. Well, if you are unsure whether a business expense which you want to claim is reasonable or not, it's best to check with an accountant. Having a chartered professional accountant do your income taxes is a deduction itself, as it is related to the cost of doing business. Please bear in mind that it's only a portion of the business expense that's directly related to your business that can be deducted. Personal, living or other expenses not related to the business cannot be deducted for income tax purposes. Therefore, as a business person, you need to be sure to distinguish between your business expenses and your personal expenses throughout the year. Now, there is no exact dividing line between the personal life and the business life. To suggest that they are easily separated is a simplistic view of the modern business world. So you need to ask yourself some questions to determine whether the expense is personal expense or a business expense. These questions are: number one, does the expense satisfy the need of business or your personal needs? Number two, is the expense one normally incurred by others involved in a similar business? Number three, would the particular business expense have been incurred if you were not engaged in the pursuit of business income? When scanning your books of account, particularly the purchase journal, the CRA will try to uncover possible personal expenses being classified as a business expense. They might be looking out for: number one, purchases from suppliers that do not carry goods that would normally be used in the normal business activity of your business. Number two, purchase invoices made out to you personally or to any other family member. Number three, the delivery of the items purchased on a business account is your residential address. Number four, personal purchases made on your credit card, particularly if any personal travel has been booked as a business expense. Lastly, all business expenses need to be supported by documentation. You have to have receipts to back up your business expense claims. With many receipt scanning apps, keeping track of receipts is much easier than before. Lost receipts mean lost opportunities to lower your income tax bill. Not having receipts to back up your claimed business expense will mean that those expenses will be disallowed and you will end up possibly having a hefty tax bill to pay which you did not expect. Missing receipts will also make the audit process more difficult and protracted. And there's 1% which you don't ever want to annoy is the person doing your audit. The audit results sometimes reflect the frustration of the CRA auditor, and he may even disallow all of the expenses, and the reassessment will imply that the taxpayer magically generated revenue without incurring any expenses at all. I hope this video really helped you understand the 3 important components of a business expense. Maximize your tax write-offs within the confines of the law. Study the write-offs which are possible and follow the rules to get those write-offs. You watching this video is also kind of learning about legitimate write-offs which you can take advantage of in your business. Thanks for watching this video. If you are interested in learning more about important tax tips, please subscribe to my YouTube channel. Bye for now.